Revolve Renewable Power is a developer of solar, wind, hydro, and battery power projects in the US, Canada, and Mexico. CEO Myke Clark is here to discuss the company's recent successes and news flow coming out of Mexico. I'm Martin Gago with Market Radius Research. This is neither a recommendation nor investment advice. Myke, thank you for joining us. You've been busy in Mexico.
Yeah, definitely, Martin. Good to join you again. There's been a lot going on in the last couple of months down in Mexico, well, across the company, really, but specifically in Mexico, one of the most interesting things that's been happening lately is the expansion of our distributed generation portfolio. So these are all those primarily smaller solar projects we install on the rooftops of commercial customers, and then we sell them electricity under power purchase agreements and then build up our recurring revenue stream. And most recently, we signed agreements for 9 of those projects, so about 2.5 megawatts of power that will be generated. And that's a portfolio that's estimated to generate up to 800 or so thousand US in revenue and about 675,000 roughly in EBITDA on the top end. I will note, just make sure you check out these press releases on our website. All the sort of forward-looking disclaimers apply, obviously, in terms of some of the risks associated with it. But those projects are now into construction as well. And those are in addition to another group of projects with the same EPC or engineering group, a group of 16 projects that we announced a little while ago that will generate anywhere from 600 to 900,000 in revenue and 5 to about $800,000 in EBITDA. So these are all projects, a total of 25 projects that will be in construction already that are going to significantly improve or increase the recurring revenue that we see. Could be up to 1.7 million US in annual recurring revenue. And keep in mind that our current recurring revenue is about 2.6 million US. So really strong growth based on these additional distributed generation projects. And really, it's just a testament to sort of what we've been doing since we signed an agreement with Callaway Capital. They're a strategic investor that have invested initially 10 million US into the company with commitments for more. And so really what that did is unlocked quite a few of these opportunities for us to move forward, get these projects into construction, and these will all be built definitely by the end of this year, most likely in early fall, and contributing to that recurring revenue stream for us.
So it's the capital that Callaway Capital provided that's letting you move, like it's giving you the capital to start developing these projects. And as well, I guess you can you can just get going with them right away. You don't need to right away find project financing for them and then just take the time to line everything up. You can move forward just a lot faster, it seems.
Yeah, absolutely. That is 100% correct. What we had previously done is you try to marry project finance with the project, with the customer. And oftentimes that was a difficult process to manage while you sort of keep all these balls up in the air. And we did it, but it's much easier when you have cash on the balance sheet. And you can go to the customer and you can say, here's the product. Are you interested? Great. Let's go. Let's sign the contract and let's go and build them. And that's what we're doing now. I mean, we have less than 10 projects prior to this that were on the distributed generation side, and we're now moving forward on 26 projects. So it just goes to show that, having a bit of cash on the balance sheet allows you to move forward with these projects much quicker. We will look to project finance them, so bring in some debt at some point. That's pretty standard with these types of projects. But initially, it allows us to move very quickly, and Callaway really was the trigger for that, allowed us to do that, and that's really what's allowed us to unlock all that value. We're going to go from 13 megawatts right now under operation to over 18 megawatts just based on these projects alone. And I think it's fair to say that given the financial partnership we have with Callaway, the work that we're doing with a construction company in Mexico, there's an opportunity for a lot more and the ability for us to scale up as well.
I would think as well when you go after the project financing, since the project's already moving forward or completed and de-risked at that point, you should be able to get better terms or just have a better choice of capital project debt suppliers at that point.
Yeah, absolutely. I mean, when you think about it, there's sort of the three stages of development. There's developing, there's the construction, and then the operation. And as you move towards operation, obviously the risk comes down. And definitely for operating assets, bringing on the debt is much more straightforward, definitely better terms as you described, because the banks can see the operation. They can see that nothing went sideways during construction, that it's up and operating, generating revenue, and it's a much more straightforward analysis for the banks to carry out. I would say, though, that we would be looking, to maybe combine a construction finance piece with that as well, to really allow the capital that we have to go further, which is obviously the point of using debt and leverage.
You gave some estimates for revenues and EBITDA on these
Mhm.
projects, and there's a considerable range on them. One of the EBITDA on one of them is from around 300,000 to like 676,000. What's driving that variability? Just the local market electricity rates, or are you like, will that fluctuate year to year, or can you describe that how that variability in revenues and EBITDA, what's driving that?
Yeah, so it's a couple things. One is sort of the conservative nature of us providing these estimates. We definitely provide a base case, which is really in terms of what we see as the bare minimum in terms of what these projects would generate. So we include that as well, so that people know that there can be some fluctuation. But generally speaking, it is based on the customer and how much electricity they use. So, when we look at a customer, we look at their power usage over the course of a year to 2 or 3 years, determine what their average is, and then build a system around it that allows us to really sell them all the electricity from that system. If they were to use less, or perhaps if the sun doesn't shine quite as much, any given quarter or something like that, that might reduce it as well. So that's where you see that fluctuation, either in terms of what the customer is using, or perhaps the resource. Usually it's not, at least in the early stages of a project, it's not related to operating costs, because those are pretty well known, and these types of projects don't require a lot in terms of maintenance, and that's all built into the model anyway, but don't require much in the early stages. So really sort of depends on the customer, depends on what they utilize, how much power they utilize out of the system, and or the resource that's being utilized, being solar energy or sunshine.
If you generate more electricity than the customer is using, do you have the ability to sell it back into the grid? And let's say if they use more than you have, then do you have to sort of make up for that by buying it out of the grid?
Yeah, so the answer to the second question is definitely not. We don't hedge, or we're not a hedge for them or anything like that. So these projects are all grid connected. So all this does is augment what they're already using, or replace it basically. And so, if they were to use, just pick a number out of thin air, 100 kilowatts of energy, or 100 kilowatts or kilowatt hours, and we provide, 300 kilowatts or something, or 30 kilowatts, 30% of their need. The way we size these projects is that they will use 100% of the energy from them. That's the goal. We don't want to overproduce, because usually the economics don't support it, or it doesn't make as much sense. Because what we want to do is we want to offset their high electricity prices. When you sell it back to the utility, usually they don't pay you that same price. And so we want to avoid that at all costs. And generally speaking, we size these so that the customer uses 100% of the energy or the electricity produced. And so interestingly, Martin, we do actually have some video of a couple of these projects, or one in particular. So this is one of the projects that we have started construction on now, with this portfolio of projects. So we announced them, a few weeks ago, when already they're up and being constructed, which is one of the amazing things about these types of projects. They're small enough and straightforward enough to build that we can get out on site and get building right away. So this is one for a department store chain, where this is the one where we're building 16 projects. And you can see what that type of system looks like. It's a rooftop. It's on that department store. And really what we do is we have the crews out there. They put the solar panels on racking systems, as you can see there. And then a crew will come in, an electrical crew will come in, start pulling wire, start connecting that system to inverters, and then connecting that system to the commercial customer. There you see the building. And then, within a few weeks after that electrical work being done, we will be up and operating. And so these move really, really fast. But it's important for people to know, like these are the systems that we're building. Like this is real infrastructure, and that's a project that has a 20-year lifespan. That'll generate recurring revenue year after year after year. As the customers' electricity prices increase, these prices essentially stay the same. We do have a slight escalator in there, but for the customer, it's a hedge against those rising electricity costs. And so we've been working with this partner to build these projects out. I think they look really cool. They're easily accessible, and they're neat projects to show to investors, I think.
And I guess as opposed to the large utility scale projects, just the complexity, the regulations, the permitting is just a whole lot easier, I presume.
It's very straightforward. For the most part, because these projects are small, it is a local permitting issue, even if there is even permitting required. Like there is interconnection, so you connect to the grid. But again, that is relatively straightforward. It's usually just a tick the box kind of an exercise in terms of approval. But it is quite a straightforward. It doesn't take years, obviously. It takes a few weeks to get the appropriate permits, and then you can go and build and get it up and operating quite quickly.
Speaking of larger utility scale projects, recently you discussed you executed the final interconnection agreement with your big EL24 wind project in Mexico. Obviously, that's progressing. Please give us an update on that.
Yeah, it is definitely progressing. That was a major milestone. Again, for people that don't really know, in terms of the development work that you do on these large projects, they definitely take years. But what we see is there are a few key development points. Excuse me, Martin. A few key milestones that you hit along the path. And interconnection is definitely one of the major ones. It really defines sort of the technical and commercial terms in which we can connect to the grid and deliver electricity. And usually it's one of the riskiest milestones in the whole project development process. Without interconnection, you have no project, without a doubt. Obviously, without land, you have no project either. But we're well past that point. And so what this does is it just de-risks the project significantly. It confirms that we have the grid access rights, and it really puts the project on a really firm path to ready to build status. So a very key milestone for the project in general, and one that we have for just a couple of other projects in our portfolio. So if you think of our 3 GW portfolio, we have interconnection on 2 US projects. We're just about there with an Alberta project, and now for El 24 EL24 as well. So it's a significant milestone without a doubt. It allows it to sort of move forward on a few other pieces now, including the final engineering, turbine supply and optimization, making sure now that we have a real optimized path for selling the power through that interconnection agreement to an off-taker, potential monetization opportunities, obviously, because this is part of our develop and sell model, being 130 megawatts. And just, a quick sort of update in terms of timelines. We're looking to be at the ready to build stage later this year, later 2026, with a commercial operation date targeted for 2028. So moving fast in Mexico, not just on the utility scale, but obviously on the distributed generation front as well, as described earlier.
And in terms of selling it off or selling off a portion of it, monetizing it, is the ready to build status, is that really the when a lot of the risk drops off and the value gets added?
Yeah, it does definitely at that stage drop off a lot of the risk for sure. You know, for these types of projects, you could probably sell them at any number of stages along that path, along the development path. But the further along that you go, assuming that it's a good project, you know, the greater the return. And that's really what we're striving to achieve here is the best return, you know, for the company and ultimately for the shareholders. And so, you know, for us, you know, you want to develop it as far as is feasibly possible to de-risk it as much as possible. Interconnection is very clearly a key point of that. So we're now past that, which is great. But now, as we start to look for those off-takers, someone to buy the electricity, you know, essentially once you have that in place, then you're looking at the, you know, an agreement on the EPC, you know, for someone to build it. And then you're really moving into construction, obviously assuming you can put together the project finance for it as well. So yeah, that ready to build status is critical, and it's really where you see the most value as a developer. But all that, you know, depends on the market, you know, how many people are interested in partnering or acquiring the project. And, you know, we see a lot of interest in Mexico right now, without a doubt, because of the demand for electricity and all of the accelerated permitting that's happening around renewable energy projects.
Myke, any final comments here before we wrap it up?
No, I think that's it, Martin. I think we covered a lot today. Lots happening in Mexico and beyond for Revolve right now.
All right. Thanks a lot, Myke. Talk to you again soon. Cheers.
Thanks, Martin.